Management, is that sort of the hidden gem that a lot of companies don't realize how important what management brings to the table is? I mean, everybody knows about you have to have assets and cash flow and things like that. How big of a role does management play in it?
So management's the differentiator. In the end, it's, banking used to be done on a handshake. One banker would look into the manager's eyes and say, or the owner's eyes and say, is he going to pay it back? They literally say in the banks, good guy, will pay, is what it used to say on all the justification for advancing loans back in the day.
Yeah.
So yeah, it still carries a huge amount of weight. In the end, can you look across the desk at who's making all the decisions and are they going to pay you back? Are they going to have the means necessary financially, but also just in their moral character to make sure that the bank gets their money back?
Right. Something that we actually had a previous conversation about it was the difference between commercial banking and residential.
Yeah.
And how even business owners don't understand the difference between the two of them.
Certainly, yeah. I mean, there's a massive difference. I always say the big test for us is we can ask anyone on the street, hey, what's the best mortgage rate today for a residential mortgage? And most of the time people can estimate, within, 0.15%. It's 3.15 and it's, pretty close. Where if we ask commercially, what's the best commercial mortgage rate, or what rate should you be paying on your commercial line of credit? We ask a lot of business owners and they don't even know.
Right.
And the fact of the matter is it's a lot more complex. In residential, the government outlines most of the rules and the banks, credit unions follow them. So if you can approve somebody within those guidelines, that's the price that you get. There's not a lot of wiggle room. Whereas in commercial, it's entirely priced based on risk.
Right.
So they look, again, management. They look at, what security's in place. They look at how long you've been in the industry. What do the financials look like?
Yeah.
They look at a whole, whack of different factors and then price the loans based on that risk. So yeah, it's a huge difference.